Hello and welcome to the Debrief video, analysing key themes from the recent PWM Global Wealth Management Summit for 2024. In order to analyse the action, we have three bright minds from the world of wealth management in the studio with us today. Kim Cornwall, on my left, spent many years as a senior private banker at both Merrill Lynch and S.G. Hambros before becoming a coach for next generation private bankers and advisors. Nicole Curti worked with Stanhope Capital and Lombard Odier before starting the Capital Y boutique in Geneva. Shamil Patois, formerly of Barclays Wealth and Deutsche Bank, runs the Opus Una tech consultancy in London. Our summit kicked off with Baroness Dambisa Moyo from the House of Lords, who sits on several UK investment boards, so a very influential investor. She offered a very downbeat perspective following the US election.
The markets rejoiced at the election of Donald Trump as the 47th president. But as Baroness de Moisy pointed out, there are certainly risks going forward with tariffs. As we saw from the 1930s, very large tariffs projected the world into a Great Depression. This time around, perhaps the proof will be in the pudding, and maybe Donald Trump's tariffs, his bark will be worse than his bite.
Well, this is the interesting thing, because the Baroness did make the 1930s comparison as well, which you made, as you saw in her talk yesterday. And she was talking about a very worrying time indeed for geopolitics, for the global economy. But she did see a positive side, which was these supercycles, which she said would power certain parts of the market. And those supercycles really focusing on artificial intelligence and the energy transition. And Edmund Shing, Global Chief Investment Officer from BNP Paribas Wealth Management, he was one of several investment bosses drawing our attention to these super cycles, to the energy transition theme in particular.
When you look at new generation clients, their worry is not only performance, as we were used to seeing with our more traditional clients, but it's really the world of tomorrow. How is the world of tomorrow looking, and how can we as investors try and influence and shape the world of tomorrow? So typically energy transition is a big topic, and artificial intelligence as well. Now the question is, how can we invest?
And that's a big question, yeah. Nicole. How can we invest? And we have two routes. We've got the traditional markets and the private markets. And İpek Mutlu, the head of private equity at İsas Holdings, a Turkish family-owned investment firm that seems to be doing very well at the moment, noted the fascination of most families with private assets. Let's just watch this clip. Is this typical for the families that you deal with?
Yes, absolutely. It's a growing share. More clients want to invest in private markets, but you need to have a certain size in order to do that, because you need to be also cognizant of the risk factors linked to it, which is illiquidity. But clearly, if you want to have an impact, as we were discussing earlier, then private markets are the route to go.
Because it's fascinating how the family office is now very much becoming the third force, because you always had the institutional investors, then you had this wall of retail money which was becoming increasingly influential, and now family offices seem to be involved in everything, impact investing, their money's being channeled for good causes. And we had Zikun Shi, head of wealth management at DBS in Singapore, talking immediately after our keynote interview about how the culture of his bank and that of other Asian players is changing away from this high-tech and fast trading to embrace these family stewardship skills, the succession planning.
Succession planning is something that all families need to address and to think about. I can speak from my own perspective, and perhaps yourself. We all have grey hair. And we know that the years are marching
Apart
on.
from Nicole.
Apart from Nicole,
And
of course.
Shamila as well.
Of course.
Relatively youthful.
So we do think about succession planning, and the more wealth you have, the greater is your need for succession planning. Perhaps to new young entrepreneurs in their 20s and 30s, it's not a number one priority. But as we know, a lot of the great wealth is actually concentrated in the hands of those over 60. So those private banks and wealth managers who ignore the questions raised and problems of succession planning are leaving the door open for other providers to come in. So succession planning is a vital tool in the kit of all wealth managers and private banks.
And I think you've hit the nail on the head, Kim, because succession planning is very much an interpersonal business that really requires the relationship, while a lot of banks are kind of being forced sometimes to use AI, maybe to save costs, maybe to streamline the business model. And we saw Lydie Percier, Group Head of Innovation at Indosuez Wealth Management, talking about the importance of AI in the business model.
Where I think AI can actually be transformational is more when we're talking about front office capabilities and investment office capabilities. And I don't think we're quite there, or most banks are not quite there, but where I've seen really interesting transformative applications of AI in the front office. Some examples would be financial planning, where you can use AI to, after you've done a fact find, generate a very precise financial plan in a matter of seconds, that's game changing if financial planning is central to your business. On the investment management side, in terms of predictive analytics, there's a lot of good AI out there which will enable you to get a really good future-looking view of what might happen with your investments. But importantly, also be able to explain that very easily to clients.
Because we saw the effect, as you were saying, on the front office as well, because Justin Onukwusi, the Chief Investment Officer at St James's Place, he talked about some really major challenges facing the traditional human investment boss. When we look at these quite intense challenges, the allocation of resources and costs, regulation and compliance, and organising contact with clients, we can really see why so many wealth managers looked quite miserable at our conference over the last couple of days. Obviously, a lot of them were in shell shock with the US election result, no doubt about that whatsoever. But it seems that many firms in the industry, they've grown, they've enjoyed their success, but they're currently stuck in a bit of a rut.
I see the forward-looking banks looking at quite interesting product development, but only product development where it actually solves a client's problem. And some of the key problems are liquidity. Some of the key problems are access, right? So this is where often tokenization, bringing it into the sort of technology space that sometimes I work in, tokenization is a great help. Tokenization creates transferability. It doesn't actually solve the liquidity problem. You then need to find trading venues to trade these assets. But so I think there's different categories. There's kind of using technology for scale to acquire new clients who aren't banks at the moment, and using technology to deliver new products to perhaps clients who've got more kind of specific or esoteric or sophisticated requirements.
I'm keen to bring in Nicole and Kim on this issue. Is there a notion of banks being caught by all these conflicting pressures, the compliance, the regulation, the technological transformation, the client's desires for something new? Nicole, are you really sensing this kind of atmosphere today?
Yes, absolutely. And I think clients, there is a real space for smaller players, investment boutiques that can focus on servicing the clients, on looking after the clients, and don't have the pressure to sell, to tick the boxes like you have in bigger organizations, because the processes become very heavy. So I think the difficulty is to find the sweet spot. You cannot be too small and you shouldn't be too big. So you need to find that sweet spot where you can really service the clients. And we see more and more demand for this personalized approach, which unfortunately larger institutions cannot offer anymore.
Kim, as a lecturer and coach, you're training all these young advisors who are coming in, and they're asking you for advice on this. How do we deal with these pressures of the business? Are they really feeling this at the moment?
Absolutely, Yuri. The relationship managers, the private bankers, are under considerable pressure and stress. I think LGT may be an exception to the rule, and they've grown, a very successful bank and grown their AUMs substantially. But at the end of the day, the relationship managers and private bankers are under pressure to bring in new assets. There's no doubt about it. One of their key KPIs is to grow their AUMs. And when I engage with them, I talk a lot about relationship management. And of course, they're asked to increase their wallet. Wallet means bring new money. And of course, we find that with clients, they can bring new money themselves, but the biggest growth factor, and I think Nicola's dwelt on this, is the family itself, because we have the term family office. So we may have an individual client, but he's part or she is part of a family. And that family may have great wealth. And if you interact successfully with that particular client, they can introduce you to other family members. And that is the number one successful way to grow your business.
I really enjoyed doing the interview with Prince Max of Liechtenstein, the CEO and chairman yesterday, and he talked very openly about the challenges to the phenomenal growth of his business, with its threefold increase in managed assets to 350 billion over 10 years, and how this was impacted by the family ownership, which has possibly helped other families, particularly in Asia, very much relate to his firm's culture. Let's just watch a small clip of Prince Max speaking. Now, Nicole, you increasingly see families, I believe, wanting their assets managed by other families. Is that a trend that's very prevalent in the market?
Yes, absolutely. It's like people who are buying luxury goods. Why do they want to buy luxury goods? I think there is the similar trend in wealth management where clients are, not convinced about the model that you were just mentioning before, Kim, where basically the RM in banks has pressure to bring more assets to increase margin. And so clients are looking really for a service that's tailored to their needs, where there is no pressure to be sold anything. And there we see a growing demand, and I think this is why also you see an expanding market share of smaller, mid-sized boutiques that are servicing clients in collaboration with banks, because ultimately all of these boutiques need to work with banks and with asset managers that are offering products to them.
And that's the boutiques, but some of the slightly larger players may need a transformation in culture and technology. And Shamil, you're very much involved in these transformations, and LGT had that definitive plan. They knew where they wanted to go. And they executed it. Is that why they succeeded in this transformation when others have failed?
Yeah, there's a few things that you must have in order for a transformation to be successful. Leadership from the top, that always needs to be there. Secondly, good decision making, and often that means fast decision making. Project teams, program teams on large scale transformations, a bit like the markets, they get quite nervous when there's uncertainty. Making decisions, and making decisions fast, is important, and those decisions don't have to be 100% right all the time. Normally, if they're wrong, they're not that wrong, right? And you course correct.
And you're saying that a lot of banks don't have those three things.
So to bring it back to say LGT, I think the leadership from the top and the fast decision making is certainly easier in a privately owned, any type of privately owned business, actually. It's not just banking. So it's definitely that would have been advantageous. If you're a big bank, typically decision making, in my experience working in-house and externally, decision making is not that fast. There's a lot of decision by committee. Sometimes that's required. More often than not, that kind of just means nobody's responsible for anything, and that's why a lot of transformational projects fail. So good leadership, fast decision making, you're on the right path.
And I can see Kim smiling at the decision making by committees, which I'm sure you've had some experience of. And is this industry moving away from that committee decision making to that model very vividly described by Shamil with that holy trinity of necessities? Is this happening, this transformation?
It's a very good question, Yuri. And the answer, it is happening, but it's happening at a slow pace. We always hear now in a lot of these big investment houses, you hear about the investment committee. And they sit down as a committee to decide the investment strategy, asset allocation, and all these things. Similarly, when they want to expand their business, you have a committee formed to improve marketing and sales. You will have, of course, have a chief marketing officer, chief sales officer, but it tends to be in certain organizations where the decisions are taken by consensus. And lucky is the institution that has charismatic and strong leadership who can demonstrate a role and have that vision.
So if there's just one thing you all of you take away from the event over the last couple of days, if I ask you all in one sentence just to sum that up, firstly, Shamil, what did you really learn from that event about the current state of the industry?
Well, I think for me, sort of slightly depressingly, confirmation that returns are going to be considerably muted for the foreseeable future.
And Nicole?
There are always opportunities. There will be more difficult times and volatility, but I think volatility also means that you can find opportunities. So I'm very hopeful that we will be able to have a good 2025.
And Kim?
I share both the concerns and the hopes of Shamil and Nicole. I think at the end of the day, the banks and boutiques and investment managers will be looking to their bottom line, and they will be using a lot of the technology that we've talked about in AI and generative capacities, because they are looking at their bottom line. And for the wealth managers, private banks, it comes down to the equation of the cost-income ratio. That means they will use technology to reduce their costs and hopefully also at the same time to boost their income, because that will work on both sides of the cost-income ratio and therefore lead to greater profitability and greater happiness all around amongst all the employees.
I think to sum up what you guys have just said, as the old song I remember, there may be trouble ahead, but there'll be music and laughter and love and romance. So let's face the music and dance. And it's been great facing the music with all three of you, with Shamil, with Nicole, with Kim. I'm delighted to have them in the FT studio with me here today. And ladies and gentlemen, delighted to have you with us today. Thank you very much for watching The Debrief. We've been filming the Debrief video following a 2-day Global Wealth Management Summit here in London. This is an industry currently shocked by the US presidential result, wondering which way to turn in terms of investment decisions, asset allocation, and the future business model. But there are also longer-term trends which the industry is concerned with: regulation, the structure and demand for top staff, compliance issues, and technological transformation, how these relate to clients' desire for a new kind of service from private banks. These are all trends we will carry on monitoring in PWM. Thank you for watching The Debrief, and please keep reading our coverage.